As we can see here, supply has bounced back pretty strongly. Of course, one of the other reasons supply is stacking up the way it is, we're now starting to see a record number of buyers, or would-be buyers, get, I would call it pre-buyers for more.
July 2025 didn't just show cracks, it exposed the collapse. In a single month, Texas recorded roughly 3,600 foreclosure starts. That's not bad. That's historic, the highest in the entire country. Texas beat Florida. Texas beat California. Texas beat every state people typically assume is struggling. The numbers are brutal and they're real. Houston led major metro areas with one foreclosure start for every 1,882 homes. San Antonio wasn't far behind at one in every 2,326. Dallas-Fort Worth posted 377 completed foreclosures, not filings, not warnings, full repossessions, more than any other metro in America. Statewide foreclosure activity climbed 20% compared to last year, marking not a temporary spike, but a runaway trend. This doesn't look like isolated trouble, it looks like systemic failure. The Texas real estate engine is stalling on every level. And while those numbers hit the public in reports, behind the scenes, something even more telling happened. Governor Greg Abbott signed emergency housing bills with a voice so tight it sounded like he was trying to hold the entire state together by sheer will. He didn't sound confident. He sounded like a man who finally realized he could not defeat what was coming. And what's coming is bigger than politics. It's bigger than optimism. It's a structural crisis built on affordability, collapsing, income stagnating, and homeowners drowning in costs they can't control. This isn't investors taking losses. This is regular people watching the home they sacrificed everything for slide toward auction while their leaders tell them to stay strong. For thousands of Texans, strength isn't the problem, math is. Here's the part no one in power wants to say out loud. Texans aren't losing their homes because they overspent or lived recklessly. They're losing them because the system changed faster than they could possibly keep up. Not long ago, Texas marketed itself as the last affordable frontier: low taxes, lower prices, wide open space, and a chance for middle-class families to finally own a home without selling their soul. The messaging worked. Between 2015 and 2022, hundreds of thousands of families uprooted their lives to chase that promise. They brought their savings, they brought their kids, they brought their hope. But by 2025, that promise mutated into something ugly. Insurance premiums didn't rise, they exploded. Property taxes didn't adjust, they devoured budgets. Mortgage rates didn't normalize, they doubled. And the financial shock that used to be rare now feels routine. Because once you understand one chilling statistic, everything else makes sense. 94% of mortgage defaults follow an income loss, not reckless spending, not overshopping, not irresponsibility, just one unexpected hit, like a car repair, a medical bill, a layoff. When housing costs were sane, families could recover. Today, there is no margin. According to Federal Reserve data, mortgage delinquencies are rising again. Adams filings show foreclosure activity up 18% year over year through August, marking 6 straight months of acceleration. Analysts now warn that 2025 could blow past last year's already staggering 322,000 foreclosures. You don't need to be an economist to understand what that means. The homeowners are not failing, the system is. And once a system breaks beyond repair, no press release or emergency session can stop the fallout. Texas didn't become a housing powerhouse by coincidence. It was engineered over decades. The pitch was simple and irresistible. No state income tax, business-friendly laws, abundant land, and home prices that made places like California feel like a joke. When the pandemic hit and half the country scrambled to escape lockdowns and high costs, Texas became the promised land. Between 2020 and 2024, the state gained more than 800,000 new residents, not tourists. Not temporary transplants, permanent movers with real jobs and real money. They brought demand that developers couldn't build fast enough to satisfy. No state added more housing than Texas. Dallas-Fort Worth greenlit over 71,000 new units in 2024 alone. That number wasn't just big, it was record-breaking. Houston, Austin, and San Antonio went all in too. Investors piled into rentals. Everyday homeowners turned into landlords. An entire neighborhood sprang up so fast that construction crews barely finished one subdivision before starting the next. A starter home bought for $250,000 in 2020 could fetch $350,000 in 2022. Everyone believed the boom was bulletproof. The state became a symbol of upward mobility and opportunity, the anti-California where you didn't need six figures to breathe. But no one understood that the same forces accelerating the boom were quietly stacking explosives under it. When values doubled, so did tax assessments. When insurers took massive weather losses, they passed the cost to homeowners. When interest rates rose, payments doubled overnight. The growth everyone cheered became the pressure that now crushes the same people who helped build it. Texas didn't fall because it was weak, it fell because it was overloaded beyond its breaking point. Let's talk about the average Texas homeowner, not the investor with 5 rentals, not the developer who can write losses off, but the everyday person who did everything they were told was smart. You bought a house in 2020. Maybe it wasn't fancy, but it was yours. Your mortgage, $1,600 at around 3% interest. Taxes, about $400. Insurance, maybe $150 a month. Total monthly payment, $2,150. It worked. You could breathe. You could save. You could handle emergencies. But then the trap snapped shut. Fast forward to 2025. Your mortgage hasn't changed, but everything else has. Property taxes shoot up to $650. Insurance rockets to $500 a month because insurers bailed on Texas or jacked premiums through the ceiling. Suddenly, your payment is $2,750 for the exact same house. You didn't upgrade, you didn't remodel, you didn't overspend. Everything just became more expensive while your salary barely moved. That's a $600 a month jump. $7,200 a year. And unless you magically got a $25,000 raise, you're now underwater. For the math to work, you'd need nearly $100,000 in income to afford what once required $70,000. But most Texans didn't suddenly start earning 6 figures. Most saw 3% raises, if any. The system didn't ask if you could afford it. It just turned the pressure up until something snapped. And for those who bought in 2022 or later, they never even got the low rate advantage. They walked straight into 6 or 7% mortgages from day one. A $300,000 starter home? That's a $3,100 payment with taxes and insurance, which means you need $110,000 plus to qualify. A starter home became a luxury. Good. The dream became a trap. And now thousands are being crushed by numbers they never agreed to. Industry veterans are quietly admitting what politicians won't. The math is broken beyond repair. This isn't just a rate problem or a property tax problem, it's the collision of high prices, high insurance, high taxes, and flat incomes all at once. It's a pressure cooker with no release valve. For months, lenders tried to spin it as temporary adjustment. Realtors swore it was seasonal. Analysts kept arguing the market would normalize in Q3, like a broken record. But by late 2023, cracks were impossible to hide. Delinquencies began creeping upward slowly at first, then steadily. Federal Reserve data showed mortgage delinquencies creeping toward 4%, with FHA loans breaking 11%. That's not noise, that's the sound of a system buckling. Then layoffs hit, tech firms cut staff, retail chains closed stores, construction slowed. Every job loss made another payment impossible. Adjustable rate mortgage holders, the ones who took risky loans because they were told they'd refinance later, started hitting reset periods. Suddenly, a $1,900 payment became $2,700. Some saw their payments jump $800 overnight. There is no household budget that can absorb that without damage. And once late payments begin, the spiral is brutal. Late fees, collection calls, credit damage, refinancing walls, then the foreclosure notice. By early 2025, foreclosure starts surged. March, more than 25,000 nationwide. July, 36,000. Texas kept topping the charts. Houston became the foreclosure capital of major metros. Dallas-Fort Worth led in repossessions. San Antonio entered the top tier. Every month the numbers rose higher. Every month the headlines got worse. And every month Texans watched. Their equity rot, while the people in charge promised relief is coming. The only thing coming was the wave. But statistics only tell half the story. The real collapse is lived one family at a time. Kimberly in Kentucky learned her home was already sold at auction before she even realized. She was in foreclosure. A clerical delay. That's all it took to erase her equity and her future. Maria in Houston watched her monthly housing costs spike $750 in under a year. Same job, same income, same house. but the insurance doubled and taxes climbed again, and she drowned. David and Lisa in San Antonio thought they were safe because they had savings. Then came a job loss, then medical bills, then a property tax reassessment that pushed their payment past the breaking point. They fought, they cut every expense possible, and still lost the home. The story repeats across every county. People who played by the rules, budgeted responsibly, skipped vacations, and did everything right still ended up on the courthouse steps watching strangers bid on their life's work. Foreclosure doesn't just take a building, it nukes your credit score for 7 years. It blocks you from buying. Again. It forces you into high-deposit rentals or predatory landlords. It locks people out of opportunity. It ends generational wealth before it ever starts. And worst of all, it leaves them believing they failed, when in reality, the system stabbed them in the back. This isn't a moral crisis. It's a structural one. And every month it spreads, more families discover that the American dream wasn't stolen, it was priced out of reach and then blamed on the victims. No spreadsheet can measure the loss of security or faith. Then came February 2025, the month when even the governor couldn't pretend anymore. Greg Abbott declared a state of emergency over housing costs and rushed a series of bills into law. HB 9, SB 4, SB 23. Property tax exemptions went up. Homestead caps were expanded. Political allies cheered. Newspapers ran headlines about relief. But the people, drowning, saw the fine print immediately. This wasn't full coverage, it was a band-aid on a bullet wound. The average savings for most homeowners? About $500 a year. That's not even 1 month of insurance increases for many Texans. It's not a payment saver. It's not foreclosure prevention. It's a press conference-friendly gesture designed to calm headlines. And when reporters confronted Abbott, really confronted him, the cracks in his confidence showed. Texas now leads the nation in foreclosures. What are you doing to stop this? His answer was a shrug with smoother words. We can't control the Fed. We can't control insurers. Translation: we don't have the tools to fix what's happening. Because the truth is, Texas never prepared for the day when affordability vanished. Relief only helps those still barely hanging on, not the thousands already drowning. Bills don't freeze. Insurance. They don't drop mortgage rates. They don't stop banks from taking homes. They don't reverse the market collapse. They didn't address the real problem, they just slowed the bleeding long enough for politicians to say they did something. But by 2025, the fire was already raging across every metro, every county, every price bracket, and even those who stay afloat are only staying afloat because they're not moving, not selling, not upgrading, not refinancing. They're frozen. The market is frozen. And freezing isn't recovery, it's stalling before the next drop. By October 2025, Texas was a warning. Foreclosure capital, insurance disaster zone, affordability graveyard. Homes that once sold in 48 hours now sat for months. 3% mortgage holders were stuck. 7% borrowers suffocated. Cities lost tax revenue. Schools faced cuts. Analysts warned climate disasters could drive 30% of U.S. foreclosures by 2035, with Texas at the center. Insurance rose 70%, property taxes 40%, mortgage rates tripled in 2 years. Investors went underwater, families couldn't upgrade or move. The collapse spread, construction jobs disappeared, retail slowed, banks tightened, builders halted projects, businesses canceled relocations, politicians blamed homeowners, but the reality was systemic. Thousands of families who followed every rule lost homes, retirement funds, generational wealth, college savings, mobility, and trust. The so-called Texas miracle wasn't failure by the Roten people, it was the system finally exploding. What's happening in Texas is not a glitch, it's a preview. Texas's housing market isn't just wobbling, it's in an absolute freefall. The warning signs aren't subtle anymore. They're screaming. What's happening right now across Texas isn't a downturn. It's a full-scale economic implosion that's swallowing equity, crushing homeowners, and dragging the state toward a recession faster than anyone can spin the numbers. And the spark that lit the fuse? Migration, the same thing Texas spent years bragging about as its unbeatable advantage. The inflow of new residents, which once fueled booming construction and skyrocketing values, has collapsed by around 65% in just 2 years. That's one of the steepest drops in modern Texas history. The pipeline of new buyers dried up almost overnight, and instead of bidding wars, the market is now drowning in listings that sit for weeks, then months. Inventory is swelling everywhere from the suburbs, around Houston, to the outer fringes of Dallas-Fort Worth. Sellers who once rejected offers above asking are now slashing prices and still getting silence. Realtors are openly admitting the panic behind closed doors. Analysts who once laughed off recession talk are now sounding alarms. Because when migration dies, the foundation of Texas real estate begins to rot, and that rot is spreading into every corner of the economy. What Texans are facing now isn't a dip. It's the kind of uncontrolled downward spiral that ends careers, resets wealth, and wipes out middle-class dreams in slow motion. A boom built on constant population growth has hit a wall, and every homeowner, landlord, builder, and lender is about to feel what happens when the demand engine stalls. This isn't a cooling market, it's a crash in progress. The human cost is staggering. Houston led major metros with 1 in every 1,882 homes entering foreclosure. San Antonio, 1 in 2,326, and Dallas-Fort Worth recorded 377 completed foreclosures in July alone, the highest of any U.S. metro. Statewide filings jumped 20% year over year, and delinquencies keep climbing. Homeowners who bought in 2020 or later face payments that soared $600, $1,000 per month due to taxes, insurance, and high rates, while incomes barely grew 3–4% annually. Families are trapped, unable to refinance or move, watching equity vanish as neighborhoods lose value, schools lose funding, and cities lose revenue, all while climate risks threaten even greater losses in the decade ahead. The unraveling has begun. The numbers are accelerating. The truth is coming out, and subscribe to stay with me as the next wave hits and the story continues to unfold.